Hello, everybody. Thank you for joining us for today's public webinar. Hello, Jim.
Good morning. Good morning. All right. It's a very interesting time. I'd like to ask a question and just put your responses into Jen. This is just for discussion purposes. How many, if you're bullish, just put bullish in for Jen. If you're bearish, put bearish in. And if you're neither one, don't put either one. But I just want to see how many people are carrying a bullish mood or a bearish mood. Just take a couple seconds to do that. It will help the discussion.
Okay. So I would say a lot more bearish overall, but there are bullish, and then you have several that are just say neutral. But
Okay.
if I had to pick one that stands out more than the others, bearish is what the sentiment seems.
Okay. What's interesting is that when I listen to some of the big technicians and a couple of the big money managers, they're bullish. And then I look at where the market is, and the market's really at a go, no-go level. We hit a new high. We took out the old all-time high yesterday. No real follow-through to the upside. And then, of course, tempo as a short-term trader. One of the most important things that you'll ever deal with is tempo. And tempo yesterday on the upside was unbelievably slow. Following the lack of upside follow-through, you got some liquidation late in the day, and then you're getting some liquidation this morning. Very often, I don't trade on quadruple witching, and I don't trade the following Monday. That's just a personal thing. I mean, that doesn't mean, as I tell people, I never have a rule I haven't broken. But so often there's so many inventory adjustments and technical things going on, technical meaning from inventory and dealer adjustments, that I don't understand, that I just stay out of the market. And there's no, as I say so often, there is absolutely no shame in not having a position in the market. As some of you know, we are in anticipation of promoting our upcoming webinar, intensive. We are putting out 6 papers, short papers, on Monday for 6 weeks in a row on subjects that going on 6 decades of trading, of things that I have found to be exceptionally important as a trader. Last week's was, and I forget the exact name of it, but it's really...
We titled it, Know Thyself, Make an Honest Self-Assessment.
Okay, know thyself, make an honest self-assessment. And that's really, I think, extremely important. And I asked this morning, how many people are bullish, how many people are bearish? Because sometimes we get locked into these positions. So go back, when I talk about the self-assessment, go back and say, okay, do you most of your trades, are you able to go with the trend, or are you a fader? I have found that very few faders are profitable over a long period of time in the market. The biggest moves in the market are being able to go with. And but what I'm talking about here, and all I'm saying is identify who you are so you have a realistic starting point. And if you're already profitable and you're comfortable, then you don't have to do this exercise. But it's an important exercise if you have struggled with the market, to know who you are. Early on, we were taught a lot of times that, always looking for kind of reversion to the mean trade. So the market goes up in the morning, then we're going to buy a pullback, or it goes down and we're going to sell a rally. And there's a psychological comfort to that. It doesn't work very well, but there's a psychological comfort to it. If you take a look, that the majority of the real money in the market is made when you go with the market. If you're doing a lot of reversion to the mean trades, or fader, it's unlikely that you're going to get the big trend days. Matter of fact, it increases the odds that you're going to be the wrong way on the trend days. So just take a look at that to know who you are, what you really do. The next thing in there is, what when we say you bullish, are you bearish? As a short-term trader, and this will be, I think this will be touched on the one that comes out this week, but there's the difference, to understand the difference between being a trader and an investor. Too many people struggle with the market because they're doing short-term trading based on fundamentals. And there's a total breakdown in that, as far as I'm concerned. Short-term trading is a totally different undertaking. Now, you want to stay in touch with the market, but for example, where are we right now? So yesterday we looked above the all-time high. So once you look above the all-time high, I'm sorry, as I would say, the hair on the back of your neck ought to stand straight up, because it is a possibility that you get a breakdown from there, but it's also a possibility that you get an upside breakout. So I would not like to be bullish or bearish in here. I'd like to be a trader. So what do we have right now? We have an upside breakout. What are we getting today? We're getting follow through. So we have an excess high. We're building lower value today, but it's not setting the world on fire. And that may be good, because sometimes the bigger breaks are when they go slower. But as a trader, try and get away from being bullish or bearish. If you're an investor, that's fine. But as a trader, it's a short term, and I'm talking about day trading. That's what we do. We're working on day trading. You want to be able to trade what the market is doing today. So for example, yesterday, when the market had terrible pace or tempo on the upside, the odds of upside follow through were very low. And yet what you had is short-term traders buying every pullback. Until late in the day, there was liquidation. Now, this is a very difficult time to understand, because you've got the quadruple witching, and like I say, I stay away from that. Secondly, you're coming up and you've got elections coming. Elections can put more speculation and some turmoil in the market. Next Friday, you've got PCE. Now, I don't think PCE is nearly as important as it has been, because inflation has taken kind of a back seat to, is the market slowing? But be aware of it, because a surprise number could roil the market pretty quickly. And now you've got the potential of a directional change in the market. So you've got an excess high. So now you want to be able to monitor, do you get downside continuation? On a daily basis, you want to watch and see what is going on with volume. What is going on with structure? Okay, so right now, we have an excess high from yesterday, and it took out the old all-time high. So that should put the hair on the back of your neck straight up and say, okay, there's a possibility. Don't get overly carried away. Now, what we say, once you have a potential, the important thing is to monitor for continuation. So if we have a downside breakout, what do we have monitoring for continuation? we'll look at volume, we'll look at structure, we'll look at value. So today we're getting lower value, but we've seen this market, has been really a lot of activity around the even numbers. So the next downside level that I would be looking at would be the 5,700 level. Okay, let's take some questions.
Okay, which profile shape is more significant in terms of reversals? A P-shaped profile when the previous day's value for the P-shaped profile, or the P-shaped profile above the previous day's range?
It's not a particularly good question, because everything has to be seen relative to everything else. So if you have a market that goes up and you get a P-shaped profile, more than likely what you had was predominantly short covering rather than new money buying. So then if the market starts to break down, then you've got to monitor very closely for continuation. One of the things that is really stymies short-term traders is they always want to have continuation. I get these questions all the time, continuation. That's what traders want. Well, guess what? The market doesn't always give you what you want. So learning to monitor for continuation is really what's important. So the market's going down today. Okay, what's the value? What's the volume going to be from that standpoint? Jen, let's take a little break, do a commercial, talk about the upcoming intensive, and then we'll come back and go to more questions.
Okay, 1 second. Let me take the screen back real quick. Okay, can you see my screen?
Yes.
Okay, so for those of you that are new, on our homepage, jimdaltontrading.com, you can follow us on YouTube. We do release the week ahead every week here, so you may want to subscribe for that. And then our official X is here as well. And here you can sign up for subscribe to our emails. Make sure that once you receive the confirmation email that you want to subscribe, that you respond to that. Otherwise, you're just kind of stuck in no man's land there. You're not fully subscribed because you haven't confirmed. And if you haven't confirmed, then you're not going to receive our emails. And I see some folks in here maybe only subscribed recently or did not receive the article and are asking for that first article that was sent out on Monday. Our next release for the next article will be next week on Monday. So if you want to receive those, make sure that you subscribe to our emails here. And as Jim mentioned, we have our next live intensive that starts on October 16th and runs through November 15th. This is our last long format intensive, meaning month long, over a month long live intensive. You can find details on it by going to our courses page up here at the top. You'll notice here we also have the schedule posted, the tentative schedule posted for all of our live webinars. And all of the webinars are recorded in case you're not able to attend it or you just want to be able to go back and review, which we obviously recommend. And you'll get access to the materials for a year after it finishes, so you have enough time to go and review. So if you have been on the fence, if you've known about these before and you haven't joined us before, this is the one to do, because like I said, you get to spend a whole month with Jim and get his insights on a daily basis as to how he's analyzing and looking at the markets. Also, this does have a prerequisite requirement of the Foundation e-course in order to join us for a live intensive. So if you have not done the Foundation and Application of the Market Profile e-course yet, then you can purchase our bundle that contains both and get a nice discount for purchasing more than one course. If you have any questions about any of our courses, by all means, contact us. You can shoot us an email at dalton@jimdaltontrading.com or contact us at the phone number at the bottom of our website here. and I'd be happy to speak with you. We also have what we call our triple bundle, which for those who are really interested and also want both e-courses, meaning the foundation e-course and the advanced nuances e-course, you can get that at a nice discount for buying all three. Okay. I see some questions. We've definitely been asked about why our NYSE volume is not working. We are looking for a new source for that because the one that we had previously has gone out of business. And so we're looking for another source. So if anybody has one that would be suitable and would, you know, would work, I should say, then write in and let us know. Dalton@jimdaltontrading.com, because we'd love to be able to get that working again. So apologize. We're still working on trying to figure that out so that we can have that back moving forward. Okay. Okay, Jim. Oh, the foundation our bundles are only going to be available, I think, through something like October 6th, because we know that people wouldn't have enough time to complete that prerequisite requirement. So just realize that those discounted bundles are temporary, and usually we only have them when we are marketing for an intensive. Okay. Jim, I'll give you back the screen.
Thank you.
Can take some other questions.
Okay, but before we do that, I want to review. We're not on my screen. Oh, there we go.
No, I'm giving you the screen now. I just gave you the screen.
Thank you. Remember what I said, the most important thing yesterday was tempo. And tempo is the domain of the expert trader. So many times traders are looking for, you know, references, where do I buy, where do I sell, etc. Tempo is kind of the real in-depth understanding of people that are successful traders. It's not hard once you start to think about it, but a lot of times people they're not trained, or they haven't thought about it in the past. But the tempo was unbelievably slow all day yesterday. And that tempo, what did the tempo say? It was just saying that there really wasn't much buying, that we took out, you know, we mechanically took out the old high, but there just wasn't any follow through to the upside. It doesn't mean it won't come back. But once you got that, then you got the liquidation, which wasn't surprising. But yesterday afternoon, I was watching, and it was interesting because a lot of short-term traders were buying every break, and you can see what the market kept coming down. So they were getting punished in there, and of course, then you got liquidation overnight. Had you realized that the tempo was so slow, the risk of buying every break yesterday was high. Even though the market, if you bought the break, the market did a lot of times, there was enough buying, it took it back temporarily, you know, to a place you could have sold and taken profit, but you couldn't wait very long. It didn't last very long. But that tempo yesterday set the tone. Now you've got an excess high. It wasn't, when you think about yesterday's excess high, you got liquidation, but you didn't get a combination of new money selling and liquidation. And I don't know what comes in the future because people don't change that quickly, but it really wasn't, it was liquidation, but something been more powerful would have been an indication that we had new money selling and liquidation. The new money selling meant you would have seen it in that you would have had, you know, more determination on the downside. You would have had more carry through to the downside early during the day. What we had yesterday with the frequent bounces is probably just liquidation, but not a combination. Today, we're getting some follow through to the downside today, but again, it's not terribly impressive. It doesn't show that we're getting new money selling. We're getting more liquidation. So just be aware. And again, remember I started out as a short-term trader. One of the things that will hurt you the most is you get locked into some long-term view. And I think it's a little early for that. It's okay to have it. Like I like to trade with the trend, and I like to trade with developing value. That will keep me honest for the day. But I'm very important. So much of short-term trading has to do with inventory getting too long, getting too short. Okay, a few questions.
Okay, somebody's asking, could you please explain excess high?
An excess high just means that the market went too high and it fell away from it. And did it fall away from it quickly or did it drift away from it? Yesterday, it drifted away from it. This thing, the market is a two-way auction. And prices are distributed through a continuous two-way auction process. If it's a strong auction, higher prices brought in aggressive selling. Higher prices yesterday probably didn't bring in aggressive selling. They brought in some liquidation, but they didn't bring in aggressive selling. And what you really want to see where a market went too high and you really got some big time money came out and started to sell. You got some liquidation, but you didn't get the other. Today, you got a chance, you're getting lower value today. But again, you're not, you're getting some liquidation and lower value, but you're not getting really aggressive selling. So you want to be very careful. You also want to be very careful that even though we're getting, some adjustment after taking out the new high and no follow through, you're not seeing signs of great selling on the downside. So just be cautious. Also remember, this is quadruple witching, and a lot of times there's inventory adjustments that are beyond my understanding. So it's not unlikely that I will stay away from the markets Fridays and Mondays, because there's just things going on in inventory adjustments that I don't understand or appreciate. If there's anything on the downside right to now, you had an excess high yesterday, you're getting lower value today, monitoring for a continuation. You'd like to see the market start to elongate more on the downside. But I think importantly, you're going to need to get down below the 5,700 level if there's any follow through. Remember that we've got PCE next Friday. We've got elections in there. So I mean, there's a lot of things that can disrupt this market. A lot of uncertainty out here. Okay. Questions?
Okay. I've had several people chime in about the mailing list. Another place you can go to is jimdaltontrading.com/subscribe for our emails. And like I said, you will have to opt into the confirmation email that you receive after in order to receive our emails. Okay, another question. How important is it that we didn't revisit the very prominent overnight POC and had no correction of the short overnight inventory in the intraday time frame?
Minor. I mean, it's remember, yesterday was long. Yesterday was long. As I say, when you got quadruple witching, there's a lot of factors from the inventory that I don't understand. So I don't overthink a day like today. I'm just one important thing is to admit that there's a lot of things about quadruple witching and triple witching that I don't understand. Their inventory, the dealers have to make adjustments. And so I will just stay away. Okay.
Okay.
Remember, we talked about tempo being slow on the upside yesterday. Tempo is pretty slow on the downside today. And it's not, remember, markets go trend, balance, back to trend, balance, reverse. Right now, it looks like the market is trying to come into short-term balance. Okay.
Okay. Can you explain quadruple witching?
No, go to the internet and look that up if you want. That's the easiest thing.
Yeah, it's a little complicated for explanation. Okay. Is the developing value area high and low material for intraday trading since it is a moving goalpost based on volume traded?
I do not use the value area high and low as a reference. That doesn't mean it's wrong. It's just not something I used to look at it many years ago, but I don't now. Too many people, there's a lot of people that do look at it just because it's easy. And if you see, the value area high today. The green dot is the same as the opening in there. So it's very mechanical, but I don't use it that way. Okay.
Okay. Okay. How do you distinguish liquidation from new money selling or buying?
It comes with experience. When you've got a combination of if you have new money selling, you'll also get liquidation. It'll just be forced. But it's a tempo. You're looking at volume. You're looking at faster tempo. You're looking at more elongation in the market in there. As you get experience, you start to understand that, okay, there's some real selling going on here. On the other side, you say, this is liquidation. Like today, it's very, 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 very slow on the downside. I mean, it looks more like liquidation. There's just not, they're not setting the world on fire. Okay.
Okay. Would you say that the selling is slower due to traders buying every break and getting rewarded for it?
Well, I don't know if they're buying the breaks. I don't know if they're getting rewarded for it. We're still, near the lower end of the day. I wouldn't be surprised if traders aren't still buying breaks because, that's what they've done and that's what's worked for a long time. And traders do what works until it doesn't work anymore. They did it yesterday, and some people that were quick, did okay, and others that were a little bit slow didn't. It kept taking it. They were buying the breaks, you're getting the bounce, but it wasn't lasting. There was more. The sellers were constantly. You had selling on rallies yesterday. I think you had smarter money selling on rallies yesterday in there. Okay. Now, coming out, the paper that comes out tomorrow, it's very short, but it is Monday. It's very short, but it is probably the thing that messed up my trading the most over the years. A very simple. It was a question of confusing investment thoughts with short-term trading thoughts. There's a total difference between trading and investing. Okay, final question or two?
Yes. Okay. How do you stay consistently profitable trading on evaluation or funded accounts while having financial difficulties? Is that too much focus on P&L?
Sure it is. Trading is very tough. As I say, and it's not good for our sales and educational courses, but probably no more than 5% of short-term traders make money, and it's probably not the same 5% year after year. It's extremely difficult. It takes discipline, and it takes an understanding of the market and understanding of who you're competing against. When you add other financial pressures, you start doing, excuse me, you start doing trades based on what you want to have happen and what you need to have happen versus what is happening in the market. And that is a killer. I mean, many people know that, I was unprofitable for 20 years. Once you get under the gun a little bit, you start getting a lot of wishful thinking and a lot of what you want to have happen and need to have happen versus having an open mind to say, what is happening in the market? Okay, final question.
Okay, somebody's asking, can tempo be observed by monitoring a study in window traders such as trades per second?
No, not in my opinion. I would never look at something like that. That's trying to make too much. Trading is an art, not a science. And any attempt to make a science out of it is, in my opinion, going to lead you down the wrong track. It's think about it like a really good running back in football. You hit the hole and and they make the cut, and the real pros, they kind of feel it, they know it. you don't scientifically run the ball. And I think there's a lot of similarity in it as a short-term trader. Remember, there's very few profitable short-term traders. The really good ones, you know, they've spent a lot of time, they've thought about the market, but they relax. They relax and they go with the flow of the market. Okay, one more question.
Okay. What would your overall thought on a market that fills a gap earlier but goes against gap guidelines?
You know, so many times what doesn't happen in a market is more or as important than what does happen. So if a market fills a gap and there's no follow through, well, guess what? The chances are we're going the other way, or, you know, you're not going to get much more. But remember, what doesn't happen can be as important or maybe even more important than what does happen. I always tell the story that if I ask a professional trader what the market did today, and I ask a non-professional trader what the market did today, the non-professional trader may do a wonderful job of telling me exactly what the market did. A professional trader may not only tell me what the market did, but they may focus on what the market didn't do. Because a really good professional trader, that's very much, and what didn't happen, very important information. All right, let me say thank you very much. I hope you consider joining us for the intensives, and I hope you take a look at these 6 articles we're putting out. There'll be another one on Monday. Thank you very much.
Yeah, and I've just brought the screen back to show where you can sign up like another place, if not on our homepage on that black strip where I showed you earlier. You can go to jimdeltontrading/subscribe and sign up here. But like I said, you will get a confirmation email that you need to opt into, otherwise you won't. And I know there are a few hundred people that have not confirmed yet. And then I'm sure some of them have written in today, you know, how come I'm not receiving your emails? So that would be why. You might want to double check that if you want to make sure that you're receiving our emails. Thank you so much. If you've got any other questions, I'd be happy to answer them. You can contact us at dalton@jimdeltontrading.com or at the phone number here, 409-422-7250. Thank you very much, everybody, and we'll see you next time.